Good day, everyone. I want to thank you for taking your time out of your day today to join us as we go over Aspida's amazing lineup of fixed index and MYGA annuities. I've got Jared Anderson on the line with me today. My name is Tim Watts. I'm an annuity sales director over here at IMES. Before we jump into these great strategies, I do have some important information that I wanted to share with everybody about who we are over here at IMES, and a quick highlight of why our agents love working with us. We will have a few polls during the webinar, and if you have any questions, please do not hesitate to put them in the webinar questions, and we'll make sure we look at them and get those answered there at the end. So do want to have an interactive webinar. Would love to have some questions and definitely like to have 100% attendance on those polls. First thing I want to highlight today is our best-in-class customer service. This is something that Aspida also offers, but our service to commitment is very high as well. You can always reach a live person over here at IMES on our business hours at 800-255-5055, and we also try to get to those phone calls within the first 2 rings or less. Our new producer builders are for those of you who are new to us at IMES. These bonuses are available based on your production level in your first 180 days of contracting with us. We have great levels that you can qualify at, and as you can see inside each of these levels are some great options for you. There's business building tools, personal perks, and you can even earn cash rewards. If you'd like to know where you stand towards your new producer builder, or if you'd like to have a conversation about how to achieve that next level, please give us a call and talk to your sales director. Moving on to our Business Builders program, we're going to go over the Referred Producer program. I do see a couple advisors on today that have taken advantage of this program. Our business on the wholesale side of the industry is very similar to yours in the field. One of the best leads we could ever obtain is a referral from one of our valued producers. This is why we want to make it worth your while to refer some of your friends in your network. That being said, when you refer a producer to us and they get contracted, we immediately send a $50 check to you. That's just the first step. Where the real money comes in is as your referral writes business, you get an override on that business. Our ownership team, Steve, Charles, and Curtis, sign checks for thousands of dollars every quarter. With that being said, if you can think of anyone that could benefit from doing business with our team, please type their information in the questions box, or you can email me at timw@IMESinc with that information, and I will reach out to them. Below that is our marketing reimbursement program. This is one of our most popular programs that we offer. For every $100,000 in fixed index annuity premium, you get $100 on your marketing reimbursement account. Why this is so popular and lucrative for advisors is we truly do consider this to be your money, so we don't cap your account, mandate where you spend the funds, or tell you when you have to cash in the account. It's your marketing reimbursement to spend and promote your business. We don't tell you the vendors that you have to use, but we do recommend vendors that we partner with and have leveraged a reduced rates and preferred service. We also have our creative team in-house that can do tons of different services for you and can utilize your marketing dollars for that service as well. Back office support. This is another way that we add value to your business. This is the core of IMES and how Charles Hearing founded us 36 years ago. We want to help the independent advisor work smarter, not harder. We are going to do that with great business building tools and resources. Of course, advanced case design assistance, life and annuity quotes that we make a commitment to get back to you within 24 hours, but we definitely typically get those back to you in around an hour to 2 unless you've got a very challenging or complicated one. Submissions to commission support is handled by the new business team. Amber Williams heads up the annuity side, and we've got Michelle Kossel, who's heading up the live side. They've got fantastic teams who work tirelessly to help you get commissioned quicker. We'll scrub your applications, submit them on your behalf, do all the administrative tracking, and get you updates on the cases as needed. We do this to ensure that you get commissioned as quickly as possible. This is a service that we provide to our valued producers and how we help you grow your business by keeping you in front of the clients while our team handles the back office support for you. Firelight eApps, this is a single sign-on at imsinc.com. Technology is where the industry is going, and Firelight is a top-notch site that streamlines the application process. Most of our carriers are on an eApp platform, so you can go to one site and submit your business. This is a COVID-friendly way, and some carriers are even offering you more commissions if you're utilizing their eApp platform. Before you submit that next app, make sure you contact one of the sales directors over here at IAMS. Make sure you couldn't earn more money by utilizing an eApp. Utilizing our Firelight platform accelerates the application process substantially. The eApp platforms help you submit business in good order for the first time. This also reduces the processing time of your business and helps get you paid quicker. As I mentioned previously, this is a single sign-on at IAMS Inc., and as we have integrated our business with Firelight, so you can have the most efficient and effective way to submit business. We do have a full in-house creative team that I talked about earlier that can help you and your practice with a lot of items that are turnkey and available for you. We can simply impose your contact information and your business logos onto it. Speaking of your logos, Agency Solutions is something that we're very good at, and something that if you haven't created a full customized brand for you and your agency, we can definitely help. This is going to assist you with the name recognition, which grows your natural market organically. We can get your logos designed, imposed on business cards, brochures, stationery, and a few other areas as well. Lastly, what everyone is currently looking for is that digital marketing solutions. We can help you with your website, social media marketing, and email marketing as well. The internet and social media sites are where the overwhelming majority of prospects go for information. Making sure you are accessible and represented in those marketing lanes is beneficial to growing your business. Contact myself or one of our sales directors when this webinar concludes to see if IAMS creative team can help you with a project in this space. Our website is a great tool for our producers to use, and another reason to work with us over here at IAMS. Once you're contracted, you'll have full access to everything you see on the slide and so much more. If you haven't registered for the website, it's very simple to do. And when we are done with this call, go ahead and create an account. We'd love to see you on there. A lot of great tools available for you, including illustration tools, online forms, product grids, product news, as well as industry updates. We founded IAMS Wealth 5 years ago now. What we've done is grow this division of our IAMS branch very organically. We've helped dozens, if not hundreds, of advisors become IARs and pass their Series 65 at a very successful clip. Once we have you registered, we will bring great value to your practice with an incredibly competitive fee structure for both you and your clientele. We have great technology and an investment platform as well. This has been a major growth sector of our business, and assets under management could be a growth sector for you and your business as well, capitalizing on all of that wallet share from those clients that you're already working with. We just hosted our 4th Life and Annuity Academy this past November in 2023. We've actually announced our next academy is going to be April 26th to the 28th. I'm going to go ahead and pop out a poll question here real quick and see who would like to have some information about this next Life and Annuity Academy. At this academy, we're going to have room for about 40 folks. We will be partnering with Athene on this one. It'll be at their headquarters. We're going to be bringing in some amazing speakers to the event, some keynote speakers, as well as go over all of those top life insurance and annuity marketing strategies, as well as products like Aspida's Fixed Index and MYGA product lines that the industry is seeing some huge success with. We've got room for about 6 to 8 more producers for this April trip, and then we'll have about 4 to 5 more for the rest of the year. We do cover all of your expenses to come out to the event, and this is designed for those producers that are really ready to capitalize on marketing strategies and double, if not triple, your revenue here in 2023. Oh, looks like, okay, next one here. We also have our Seaside Sanctuary. This is a producer rewards trip. The qualifications did just start this January,
Hey,
so we
Tim.
do have a bit. Yeah,
Sorry, it's Jared. I don't think your screen's up, buddy. It's showing it's still, there you go. It was still showing that. Sorry, I didn't want to interrupt you, but I wanted them to see the screen. So go ahead.
perfect. Thank you for that. Appreciate the help there. All right, so Seaside Sanctuary rewards producer trip qualification just started in January, so still plenty of time to qualify for this awesome trip to the Kauai Islands there in South Carolina. That's going to be in April of 2024. Next, we are out there on Facebook and LinkedIn. We put a ton of great stuff on our social media platforms. Definitely go out there and like us on Facebook and LinkedIn to connect. So with that being said, everybody, I appreciate you going through that intro with me. We really do take excellent care of our producers over here at IAMS. I'm going to go ahead and change the presenter over here to Jared so he can get his presentation rolling on Aspida's fantastic line of fixed indexed and MYGA products.
Thank you,
Jared, I
Tim.
think it is
I can
under
hear
your
you now.
control. All right.
All right.
Perfect.
See if I can get this figured out. All right. Let's do this. Give me just one moment. All right. Are we good, Tim?
We are. I'm seeing
Awesome. Perfect. Thank you. Thank you to Tim and the rest of the crew at IAMS for giving me the opportunity to speak with you guys about Aspida. As Tim mentioned, Jared Anderson from Market Synergy Group. Just a quick background on Market Synergy Group. We are a product development and distribution company. We work exclusively with a handful of IMOs that we've established relationships with over the last 20 or so years to try and bring proprietary products to their sales force for a solution. As Tim alluded to, what we're going to talk about today is Aspida, who is a brand new company that has kind of hit the ground running, and we've had a tremendous amount of success over the last 6 months since we launched this product. I think it's important to give a little bit of a background and understand who Aspida is. As mentioned, they are new to the insurance space, so it's not a name that a whole lot of people are familiar with. One of the things that I like to point out is, I think I was looking yesterday and we just surpassed our 4,000th contracted agent. In the big scheme of things, utilizing Cheryl Moore's reporting, there's over 1 million contracted agents in the United States to sell life insurance and annuities. We are just at 4,000. And the reason I point that out is because the newness of this gives you a competitive advantage through the proprietary process that we do through organizations such as IAMS. So very new, but had a tremendous amount of success early on. So real quickly, who is Aspida? There's Aspida Life and Aspida Reinsurance, but more importantly, Eris Capital Management and Eris Insurance Solutions. So they are backed by private equity, Eris Capital Management, as mentioned, and that comes into play in a lot of different ways, whether you're talking about credit origination or reinsurance capabilities, which they have all of. A- rating with AM Best and founded, as mentioned, in 2021. I've been in this business a little over 20 years now, and to think about a company coming to the stage with an A rating is quite frankly a little bit unheard of. So we're obviously very excited about that. As we continue to grow, they hope to continue to see those ratings rise. But as mentioned, a brand new company, and generally speaking, you don't see a company come out of the gates with an A rating. Because of the backing of Eris Insurance Solutions, they were able to do exactly that. So that's a very important piece to point out. So just a quick profile on Eris Capital Management: over 340 billion in assets under management, global alternative investment manager with platforms across 5 different businesses. And as you can see, incredibly large, incredibly big company. And quite frankly, an area in which I've seen the insurance side of our business kind of gravitate towards is the backing of these private equities that have the ability to get a little bit more yield than a traditional insurance company, therefore offering better consumer solutions through the client products that are out there and available. As mentioned, Aspida Life and Aspida Financial A- rating, and then they also use third-party reinsurance through Aspida Re. And I point that out because it's really important. Again, looking for better opportunities for yield and capital capability. makes this extremely more competitive. What quite frankly happened is over the past 10 or 12 years, Ares Capital Management has been doing credit origination and reinsurance for other insurance companies. They came up with the idea, the concept that they should start their own. So that's why we're where we are today with Aspida and launching last June, as Tim mentioned earlier, first with MYGAs, and now as of November 7th with our ring of FIAs and continuing to grow that. So very new, but have a ton of capital backing in them, and the A- rating is very important. Tim made mention earlier that the majority of this industry is going towards a Firelight or some sort of e-application process. One of the things that really separates Aspida from the rest of their competition is their ability to do business. And in this current environment, obviously, the fixed index annuity space has exploded over the fourth quarter and certainly into the first quarter of 2023 due to the demand. But what Aspida has done is taken it a step further. They kind of call themselves a technology company issuing insurance business. And why I point that out is that's important to you, the advisor. As you're meeting with clients on a regular basis and you're trying to get business issued and interest rates are changing and markets are going up and down and fluctuating with all the volatility associated with everything that's taking place, they are best in business on getting that taken care of. So I just want to share a few stats with you. 67% of the applications funded BFT were issued in less than 1 hour. I'm going to come back to that point, but I want to read the rest of these. 42,000 phone calls, average wait time is less than a minute. Because of their automated tools, 75% of the applications that are submitted in good order, and 99% of the commission payments are processed daily without fail. Over 99% first review tasks are completed within 1 day, and they've had, as mentioned, around 4,000 agents contracted. A lot more have been invited. We hope that you guys will see that this is an opportunity for you and your business to make a streamlined process and much simpler. So going back to the top, the automated system that they've created is not Firelight, and it's important for me to point that out because it is their own proprietary e-app system. So a little bit different than what you're used to dealing with in Firelight. The feedback I've received, once you've run through a couple applications, you'll find that it's much more user-friendly and simpler for the client. In addition to that, the way that they've created this is everything is done from a technology standpoint and done online. And again, this is a change for our business, but it's a change for the better without a doubt. And to give you a couple examples of what I mean by that, you have the ability to sit down with your client. Say, for instance, I'll give you an example. There's a 2 o'clock appointment today, and they have a MYGA, because MYGAs tend to happen with cash without, much more common than an FIA. But this is a real life scenario that has happened. You sit down with that client, you walk them through the process of taking the application online. The second you hit submit as the advisor, and a copy of the actual annuity policy is emailed directly to you, directly to the client. It's auto issues, so it issues same day with a cash with application, because the way the system works is you simply take a routing number and an account number from a check, and you submit it, and it auto drafts that directly out of the account. You as the advisor are literally paid the next day. So I want to repeat that, because you could literally have an appointment today at 2 o'clock and have a policy issued by the time that appointment was over, and you as the advisor are paid the next day. Client is out in there earning money, no waits, no hesitations, nothing along those lines. In addition to that, since everything is done on from a technology standpoint, their turnaround times, even for transfers, are within a couple weeks. And we've already, since June of this year, issued over $1 billion of business with them because of the success that we've had in the process that you go through. I mean, we understand, for you advisors, that time is money, right? And the more time you have, the better ability you have to see more clients. And they've made this process so simple that people have just gravitated towards it. And I think if you give it a try, you're going to find that the system that they've created is hands down the best in the business, without a doubt. So with that little commercial on how easy it is to do business, I want to just jump into the product with you guys and talk specifically about some of the details. Again, it's a simple, safe accumulation as it stands today, in addition to MYGA, as Tim alluded to. So we'll first talk about the Synergy Choice Max. 2 different contract terms. So we have 5-year options as well as 10. all the basic information that you would see on an annuity. Crediting strategies would be Citi. We have a Citi index as well as Goldman Sachs, and then a very competitive S&P. In addition to that, we've created something that, quite frankly, to be blunt, is a better option for the client in a lower interest rate environment. Nobody could have, predicted the last 12 months of interest rates. So therefore, we've seen massive increases in caps and rates across the board, and we continue to see that now. It has dialed back some with the 10-year reaching 420 over the last 3 months or so, and then, in the 350 to 360 range as we stand today. But at the time, we wanted a buy-up option to where essentially you could pay a 1% fee in order to get higher caps and rates, and that's still the case. Penalty-free withdrawals, 10% of contract value starting in year 2. Of course, RMDs and all of the main features. And in addition to that, there is a bailout feature that we'll talk about when I put the rate sheet up here in just a second. All things that apply to most annuities: nursing home waiver, terminal illness, and death benefit. In addition, we have the Synergy Choice Bonus, which is a 10-year product with a 10% premium bonus. This one has gravitated to being our most popular from the standpoint of what we're seeing in sales, this and the 5-year option. So incredible crediting strategies, 10% bonus as mentioned, on a 10-year chassis. Again, same types of features with the premium bonus. As I mentioned, it's 10% of initial contract vested at on a 10% rate. I'm going to skip through this and jump to the state approval page. We are getting really close. I don't know if there's anyone from California on the call, but we're getting really close to California, which is obviously a big one for us, for the industry, for the space. Beyond that, though, we are in 46 states. This is as of November 28th. We haven't had an approval since then, but very widely accepted with all policies, the 10-year product, the 5-year product, in addition to that, the bonus. So the crediting strategies, I just want to do a quick overview of the Citi ARIA index, as well as the Goldman Sachs Grand Prix. So what we did in the design of these is we tried to get 2 different indexes that have the potential to work in different economic environments. So the Citi ARIA index is one of the only, if not the only, 100% equity index that dynamically allocates to the best performing of 2 ESG underlyings, the Citi Global as well as the Tech. So the way I like to explain this, the Citi ARIA index is your home run index. The expectation would be as markets rise, so does the Citi index. So this is kind of your home run strategy, if you will, where we're hoping to see a couple years with some double digits, but quite frankly, we'll see somewhere it's low or maybe no return at all. We paired that with the Goldman Sachs Grand Prix, which is more of your singles and doubles, deploys signals from well-studied market anomalies to drive dynamic rebalancing between NASDAQ futures and Treasury futures, then applies a patent-pending volatility control mechanism, TrueVol. I want to talk briefly about TrueVol. TrueVol was launched about 2.5 years ago, and we're starting to see that on more and more vol control indexes in the space. Essentially what vol control does is, if you think about markets on a daily basis, volatility controlled indexes, for the most part, 99% of, are looking at what a market opens at. I'll use S&P as an example. S&P opens at 3,000 in one day, and all of a sudden we hear that there's another bank collapse or something along those lines, or there's a bank in trouble. So it drops all the way down to 2,600. And again, I'm being dramatic here, but I just want to show you the effect of TrueVol. And then by lunchtime, we realized that it was a mistake or something along those lines, and it jumps all the way up to 3,200 and then dials itself back to 3,000. So 99% of vol control indexes will say the S&P started at 3,000 and closed at 3,000. So there's been no volatility throughout the day. What TrueVol technology does is picks up on that volatility throughout the day and then applies the signals accordingly. So again, this is what we're finding, and this is picking up between 1.5% to 2% on annual yield in any given year. I think Tim's been a part of some of the calls I've had in the past, because we have 3 products now with TrueVol technology. I would think that over the next 4 to 5 years, you're going to see something similar to this, if not TrueVol, on most of the volatility control indexes. Anytime you can pick up a couple percentage points in yield, it's a big deal. And it's simply done by gathering data throughout the day and taking into consideration the effect that could potentially have on how you're allocated. In addition, as mentioned, the S&P 500 has slowly, I shouldn't say slowly, quickly became, the most common crediting strategy. 2 years ago, we laughed. There was, caps in the 2.5%, 3%, sometimes 4% range. And over the last 12 months, with our sudden rise in interest rate, option budgets for insurance carriers have gotten substantially higher, therefore allowing for opportunities for more competitive S&P caps. No different with us here, extremely competitive from that standpoint. But I would argue, and we'll talk about this here in a minute, that diversification is key, just like with anything that you do in financial planning, right? If a client walks into you and has a 401k that somebody has convinced them to allocate 100% into S&P, you're going to be licking your chops because you know that that's not what a client should do. I think the same should apply for a fixed index annuity. There's opportunities within this index to get returns when markets are down. There's opportunities for them to work in different economic environments, and I think it makes a ton of sense, and we'll talk about what we do for that. As mentioned, here's the different crediting strategies on our Synergy Max, S&P point-to-point with participation rate as well as a cap. In the cap, the Goldman Sachs has a point-to-point participation rate, and we'll show you those rates here coming up, as well as a fixed account. So here's a quick snapshot of our current rates effective as of next Monday. So we are actually dialing back rates a little bit because of the economic environment and the recent massive drop in 10-year treasuries. The other thing I'll say is you'll find that Aspida moves very quickly because of their technology platform. So it works, good and bad, quite frankly, if I'm being blunt. When there's a need for a change in rates, they're going to probably act a little bit faster than most carriers because of the technology advantage that they have. But on the contrary, if interest rates were to rise, they're going to be the first one to increase their rates as well. So it works well in a rising interest rate environment, but they are making some changes as of Monday. As you can see, we'll focus first on the 5-year, still incredibly competitive. Again, this is after the rate change. The 5-year has an S&P cap of 10%. In addition, you can see a 49% par on the S&P, or the Goldman Sachs index at 195, or the Citi REA at 95. Again, very competitive. I would ask you to reach out to your salesperson at IAMS and have them run you an illustration to take a look at this side by side with whatever it is that you're currently selling. In addition, I like to point out the fixed account, over 4.5%. We're seeing a lot of allocation into the fixed account as well. A portion of that, 20-25%. A 50% allocation into either the S&P par rate or cap, and then the rest going into these volatility control indexes is what we're seeing the most of. And I'm focusing, by the way, for full disclosure, on the 100,000 plus. There are bands on the rates. On the 10-year product, you can see the cap is at 1075, the par rate at 52%. So again, extremely competitive from the cap and rate standpoint. And I always tell people the best thing that you can do when comparing different carriers is focus on their fixed account as well as their S&P rates. I will say that most carriers in today's environment are subsidizing a little bit on their S&P rates. They're being a little bit more aggressive on pricing because that's the most common and most well-known index. However, looking at our volatility control strategies, they're incredibly aggressively priced and have great opportunity for growth. So there's a great conversation to be had around the diversification. One thing I want to point out here on the rate sheet, you'll also see a bailout rate. As a new company, there's concern. I get questions every single day. How are they going to treat their renewals? The true answer is I have no idea. I do know that if economic conditions are exactly the same today as what they are 365 days from now, I don't anticipate seeing any change. But again, I don't work for this insurance company. We are strictly the designer and the distributor. But we've added a bailout feature is my point to that. So at any time, if the S&P cap were to be reduced below 5%, say for instance, we go to an economic environment where interest rates are in the 50 basis points range again, and insurance carriers start, crashing caps and rates because they're super high in this 3.5% to 4% range as we stand today. Your client has the ability to walk away with full accumulated value with this bailout of 5%. So if the S&P cap ever gets below 5%, you have a chance to walk away, as mentioned, with full accumulation value. What's interesting is you don't have to even be allocated into the S&P crediting strategy. They're just saying if that cap is ever offered at below 5%, take your money and go somewhere else if you choose to do so. In addition, one of the unique features that they have is that for planning purposes on income, they do offer a 1x5 annuitization, which I think is something that is becoming more and more rare in our space. So again, if you're doing bucket planning or anything along those lines, it's a great feature to have. Focus real quickly now on the Synergy Choice bonus rate sheet. As mentioned, 10% premium bonus on a 10-year product approved in 46 different states. Again, the easiest to compare is if we focus on the S&P Cap at 7.75%. I would argue that from a bonus standpoint, that's one of the highest in the industries as it stands today. Just running through the caps here, you can see where they're at, 340 fixed account. So essentially, does the client want an upfront bonus to get a little bit of a head start, or would they rather have the opportunity for growth with higher caps and rates? That's something that you can work out with and have that conversation specifically with your client and then make that decision. As I mentioned before, one of the things that we do at Market Synergy Group is try and focus on market research and things that make sense for us. So we create what we refer to as our optimal allocation piece that is accessible to each and every one of you to just kind of have that conversation with your client. And what we've done is we've taken a combination of all of the different indexing options that are available within the Synergy Choice annuity and said, okay, how can we maximize our opportunity for growth? Again, based on an illustrated rate, but also take out those years where you're having to have that tough conversation where there's been 0 credits. So again, we push very hard optimal allocation. Tim or anybody at the IMS office has access to this. If you want to take a look at it, please reach out to them. I'm sure they can get it over to you. But again, it just shows different combinations of allocations within our crediting strategies, and then the optimal return, the best opportunity for growth with those years in which you're not going to have that conversation about potential zeros. So again, you can see here, there's certain allocations where we throw specific crediting strategies where over the last 30 years, there's been no year from an illustration standpoint in which a 0 was credited. And again, that goes back to your ability to allocate within the different options that are available within the indexed annuity. MYGA rates, real quickly, again, these rates are changing on 3/24. I was able to get this updated for you yesterday to understand where we stand from a competitive standpoint. We'll focus on the right side. With the Synergy Choice MYGA, what we did is we stripped it down to nothing but crediting rates and then allowed the optional withdrawal features as listed below as additional. What we found through our research is that, the majority of MYGA sales never use the interest-free or they never have a need for 10% free withdrawals. So why not have a higher rate? And as you can see on the right side, they're extremely competitive. The 3-year has been our most competitive. It's currently at 5.35 if you have clients that you're meeting with this week, but we'll be dropping to 5.1% as of next Monday, the 24th of March. But again, as I mentioned before, if you're sitting down with a client, you could literally have this policy issued by the end of the day today, and then you as the advisor could be paid on it by tomorrow. Commission is always important. You guys don't work for free. I completely understand that. So let's focus again. I apologize. This is a little bit blurry, but on the upfront commission for the 5-year, it's a 4.5% commission up to age 75. On the 10-year, the commission is 6.75. There are trail options that you see on the right side, 80 basis points or 1%, again, up to age 75. In addition to that, we do have a tiered-based agent commission program. So as an advisor, once you hit $2 million, let's focus on the 10-year product, you are getting an additional 50 basis points retroed back to $1, which essentially puts you at 725. Once you hit 3 million, you're getting 100 basis points or 775. And once you hit 6 million, you get 150 basis points or 825. All of those numbers are essentially cut in half for the 5-year product. What I will point out is you have the ability to sell both and then qualify accordingly. So as an easy example, if you sold 3 million in the 5-year and 3 million in the 10-year, you would be at the highest possible levels. Those are paid out on a quarterly basis. We're getting ready to wrap up the first quarter and we have some massive, massive checks going out. So again, we understand that you guys are operating a business. Our key is how can we get the most competitive product out there for you and your clients, but still be rewarding for you. And I think this points out exactly that. In addition to that, we are running a 14-month contest for producer incentive trip. It will be the top 25 producers. We're new to this with Aspida, so we've chosen to limit it to the top 25 with with a minimum of $5 million in issued premium from November 7th when we launched the product to the end of the year, December 31st. This trip will be held at the Four Seasons in Maui. I believe the dates are on there, but it is, yes, end of May of 2024 through the first week of June. So again, we're looking to make this small. Hopefully next year, we learn that we have an opportunity to grow this even more. But again, an incentive to you, the advisor, to take an opportunity to get away after a hard year working is something that we felt was extremely important. So very excited for that as well. So that's all I have. I'll wrap by saying the thing that I think is most important for Aspida is the agent usability, your ability to simply sit down and have a conversation with your client, write an application, get it issued that same day or within a couple weeks, even if it's a transfer, is something that you don't see in this space today. We have incredibly competitive caps and rates with some great volatility control indexes. And in addition, we are working on an income solution that we're hoping to have out sometime in the second quarter of 2023. So very excited where we're at with Aspida. As I mentioned to you guys, we haven't been in business with them for even a year, and we've issued over $1 billion. I think if you'll look, this is probably the fastest growing insurance company in the FIA space that we've seen in a long, long time. And we're very excited to be a part of that and have IAMS as our partners in growing this. So Tim, I'm going to turn it back over to you and see if there's any questions that pop up that I'd be happy to answer. In the meantime, if you want to reach out to your marketer at IAMS or your sales associate and ask them questions, they all know how to get a hold of me. I'm very free. I'd be happy to have conversations with you in a deeper matter if that question comes up. So Tim, turn it back over to you and see if we can answer any questions.
Right on. Well, thank you very much for that, Jared. I do actually have a couple of questions. Wanted to ask the first one here. What is your current rate lock with rates changing, all the time with all the volatility that's going on? What is the rate lock term there for Aspida?
Yeah, so if the application is received prior to the rate change, Tim, I believe it's 45 days. I would have to verify that with our new business team, but I believe it is 45 days. And the thing I would point out is, as mentioned before, as quickly as they're getting information out and transfer paperwork out, I'm not sure that we have anything that's been pending much past 30, quite honestly. But I'm 95% certain that it's 45 days.
Awesome. Next question was around the bailout on the bonus 10-year. How does that work with that 10% bonus on the 5% bailout?
Yeah, great question.
Is that included in the accumulation?
Yeah, so it's a vested bonus, but it is still included in the accumulation. Basically, you're getting your contract value at the time you choose to bail out. So you get 100% of that bonus in the event that the cap drops below 5 and you choose to walk away.
Awesome. Thank you very much. And then the last thing I just wanted to share is I've got several agents that have been working with Aspida for months now, and the customer service as far as being able to submit an application today and getting paid the next day. Guys, this is as close as it gets to going into a bank with a CD, except for you get paid on this one. Their customer service is phenomenal. Agents, reach out to me all the time and they're like, hey, you talked to me about this, but I couldn't believe it, but that check's already in my banking account. So, they are extremely efficient there. I really appreciate the time, Jared. With that being said, everybody have a fantastic day. And if you do have any questions, we will be here, 800-255-5055. I did have some issues with the polls, so I'm going to get everybody on here some information about our academy, as well as that optimal allocation sheet that Jared went over today. I think that's a great piece to be able to show to your clients. So thank you, everybody. Have a great day. Bye now.